We were wrong. Yes, we, not just me, you too. I know. I was wrong. And why? How? It's simple. I had my bias on the higher time for weekly time frame. All right, but the higher time frame was in play because the 3 month time frame. We have 1 month and 17 days, so basically a month and a half till this close. And right when the monthly candle opened of the quarterly, as you guys know, we're short-term traders. The quarterly candle is our biggest time frame candle that we care the most. We don't care about the 6 month. We do care about the 6 month time frame, but that's a very longer term. But the open, high, low, close concepts, we care about the 3 month, monthly a lot. Yes, weekly we do care about it, but the weekly is more of an execution time frame, right? Weekly, daily, we execute the monthly. The 3 month tells us where the market will go in a short-term basis, which we care about. And as you can see, last month was a candle open, and the candle instantly dumped. So open, you probably can sell. What if you can see it made the high, but guess what? Overall, the candle went to the downside. So open, low, we had a total soup, SMT, that eventually, what we're going to do, we're going to continue, make the high, then close. So another aspect of the 3 month, quarterly candle, first month accumulation, second month manipulation, third month, expansion, accumulation, manipulation, expansion. As well as if you check the higher time again, we have a month and a half, and that's a lot of time, right? That should be happening that quick. So market instantly open, went down. That is a sign of a total soup, right? See daily time frame, beautiful sign of a total soup, right? So we had a 3 month time frame was overall bullish, and that's the lesson we're going to talk about. I didn't take any trades. I did say on the Telegram that my level was, my level failed. So I'm bullish now because my level failed, which that was a very good candidate that I used to determine whether I'm going to be bullish. And that's how you should guys be doing it as well. I don't like to tell like my buys on the trades because of my trade. I could be right, my direction, and I can take a setup, and that setup could go in a loss, and I could go back to a different bias, and I could be wrong, right? Because my first bias was correct. I don't determine my bias like a reanalyzation based on the trades. I go based on the chart, right? Because trades, if I'm entering a 15-minute, 5-minute time frame, my stop loss are very tight, and those stop loss should definitely hold, right? That's the point of it, right? Because we're trying to determine the low of the day, high of the day, low of the week, high of the week, high of the month, low of the month, etc., etc. Low of the quarterly, high of the quarterly, etc., etc. So the quarterly candle has a month and a half to go through. So that's a lot of time, right? So market opened low, we're gonna make the high and close because we have 1 month and 17 days. That's a lot of time, right? That's a lot of time for the quarterly candle, which that means it's gonna be high likely bullish, right? So the monthly candle, we had a monthly S&P to the upside, a monthly CRT to the upside. So a drawn liquidity in the monthly time frame is over here. And unfortunately, I didn't know this because I thought, I'm going to give my bias out of the weekly, but there's going to be times where the weekly is not as efficient as the monthly, the quarterly. Well, we got to pay attention. Yes, weekly, we got to pay attention on a weekly, level, etc., etc. But the monthly and the 3 month, we got to care about their open, high, low, close, open, low, high, close, right? Because open, total soup, continuation, high, close, right? Etc., right? So the bare bone, skeleton, right? So you can see in the monthly time frame, we had a monthly CRT. To the upside, which that's the whole reason why the market wanted to go up. And we're gonna the same thing happened with DX5, by the way. On the weekly time frame, what we had here was basically on a weekly time frame. Now we could go determine this differently. Now we could say, okay, we tap the retracement block, which causes a retracement to a IRL, which our IRL is going to be this order block that filled liquidity. And you probably wonder, well, what about this order block? What about this order block? Because this one was based on the monthly open high low close, right? So we have a monthly open high low close. Now we're going from a weekly IRL to this weekly ERL. But it didn't make sense. It did at first. It didn't make sense to me because, you know, weekly should be following it. Yes, it is following the protocol. But I thought it was gonna be this, either this. Now this IRL never filled liquidity, but I thought it was gonna be this IRL which filled this auto fair value gap. But you gotta look in a dominant way, right? A dominant way, which is this is the IRL which is most dominant. And you probably wonder, well, what about this? Right? But in this picture, it's not even about the dominance. It's about the hard time for the monthly. When it came down, it closed all down here. So that means below the candle or whatever the IRLs are around here is going to be used as a rejection in price, which this weekly IRL, you know, rejected the price to the upside. And during this specific week, we had S&T, the weekly CRT low, and now the weekly CRT high, which already got met, as well as now going to this weekly CRT high. So we had our buy strong this whole week. I didn't execute any setups because I didn't have any setups, and I saved myself from any potential losses because it wasn't. I'm very thankful, but that also made us miss a lot of setups. Right, on the daily time frame, we didn't really have any daily range, so we are expecting this price point to hold without going to the weekly, without going to down to the daily CRT low, because there was no daily ranges here, right, in the daily time frame. Yes, this right over here is a daily range, but that is no longer effective. So, and you probably wonder, well, after it gets created and there's an important key level, like, you know, this low that broke its high, aren't we supposed to look for this low to get broken, like to get souped before going up higher? No, only if this daily low fails, then we can consider it. Otherwise, we cannot. But we first need to see this fail, right? How do we know it's gonna fail? By going down to that time frame and executing it. And if the daily level fails, then we'll be like, okay, this could be our next potential rejection point. Then eventually, if this doesn't deliver, then it could be, you know, if it doesn't deliver, then we can anticipate to go down here before going up higher. But this was enough. And usually, in order for me to pick this low, right, instead of because this is an important low, right, because this low was the one to put its highs, right? So in order for me to pick this low has to be involved with the daily range, right? Because there was already a daily range, right? During the daily range, during the creation, there was no important highs that broke a low, right? This right over here, this high broke these lows. That's why that's a target. But during this creation, the daily range is already there, so this is not as much as important. But if there's a say the daily range that got created and this image this, then this key level is what we're looking for a soup before longing it up, because it got created during it, right? Rather than getting created after the daily range has already been created. So yeah, that's what we had. And on the daily time frame, yesterday was a beautiful longing day. We had a classic 3-candle model, Monday low of the week. We had a key level on the daily time frame, and this right over here, a new concept I'm gonna teach, which I'm gonna speak about, is an important. So this candle right over here was the candle that dug below this old low. Although this candle is the same, you know, in the same candle. Usually this candle is supposed to be a bearish candle, but this candle is a bullish candle, right? But in that case, it's gonna be this. Why? Because this is the candle that dug, although it dug below its own low, but it will still count as a candle that dug below the old low, which is this daily low. So this daily low will be a sensitive price point if there's a daily share, if the daily CRT above it, right, or below it. So the bearish reaction would be something like Okay, that's not a good example. On a bearish reaction, it would be something like this, right? On this daily auto block that got created, right at the start of it, right above this daily candle, it was auto block that reflected and eventually pushed down to the downside. And this is the candle that dug below an old high, which is this candle right over here. Now, if we go to, let me show you guys if I got any better examples here. Right over here. So below this, so we don't long any of these CRTs unless the market or until the market goes down here to this specific daily auto block. Why? Because this is the candle dug below its old low. It never got repairs. Since this candle never got repairs, although people wonder what about this candle? This candle doesn't matter because this candle's closed bullish, so it's gonna be overall this candle, right? Still back to this point to the same candle. This candle dug below its old low, which CISD, right? So market, we are only gonna long it up once the market taps it. So right, this auto block is right below the CRT low. So we're only gonna enter when the market taps it. So if you were to long this day, you would have been flat because market came back down. Right, so that's a way you guys can that's a theory from this guy who's more of an advanced level on trading, right? That's why I got his concept out of. It's definitely correct, right? The way I like to use it is if it's above or below a order block. If it's inside the order block like this, right? This case is inside the order block. It's not really above it. In this case, this example is not a very good example, right? Because you don't really need need to care about this specific type of price action because it's the soup of the high is already in the side of the key level, so it doesn't matter, right? Because if you were to short this down on Friday, thinking that it will go down even lower without getting souped back up, without going back up higher, would have been wrong because Monday, if you just short it down, Friday, if you just short it down, Monday would have souped you out, right? So that's why the only time I like to use these order blocks are if it's above or below CRTs. In this case, below a CRT. So if you go down to the lower time frame on the hourly time frame, on the 15-minute time frame, I mean, not the hourly. Right below this old low is fair value gap. So fair value gap old lows are good to the soups. Guess what? If you long that up, you would have been wrecked. And that's what I'm thankful about because my dumb ass, I'm not a dummy, but I would have taken a trade, right? 10 out of 10 times. That's why I'm very happy. Like, although, yes, I missed out a 335 RR trade, potential trade. Yes, I missed it out, but the lesson is much more important than the trade at the moment because I would have taken that trade and I would have thought, okay, I'm supposed to be bearish, and I would have messed up, right? So now this helped me avoid that. And I'm very thankful for the guy teaching me this, right? Thank you very much, right? If you're watching this, thank you. You're probably not watching it, right? But thank you regardless, right? All credit goes to Romeo. And I don't know how to say his name. Alright, let me pronounce it correctly. Only2CC, I don't know. Okay, see some anime name, right? Only2CCT, I don't know. It sounds like that. However it is, thank you, right? Credit goes to you. Credit goes to Romeo. Although it came from Romeo, but he's the one who taught me, right? I didn't learn it from Romeo because Romeo is a guy who he plays hard to, he plays it a little hard, right? It's kind of hard to get information out of him because he says it in a broader way, not in depth. Well, other guy will show you in depth, right? And the reason how I found out today how I was wrong was because this guy told me, he's like, oh yeah, I gotta pay attention to the 3-month time frame and the monthly time frame candle shape. Pay attention to this open, high, low, close, open, low, high, close, open, high, low, close, open to the soup, expansion, close, right, etc., right? That's what he told me. And that's how I knew that my bias was wrong. And I'm very thankful for that guy. And I probably wonder, well, isn't there like auto block every single candle? No, we're looking for specific auto blocks, which that souped out a old low, which is a CRT low, right? That's all we're looking for. And that a CRT low slash what? CRT low slash old low. It's still the same thing, right? Because if you were to do that, you could have longed this candle, right? You could have longed this level because there was no setups until all the way here, right? So you could have longed this up or this candle right here. But this one would have been giving you a little bit more RR. Could have done that. And how when it's below an old low, I like to say I could take this auto block without there being a CRT. But if it's in a way where it's a CRT soup and not a important low soup, because this is an important low, how daily range, right? Soup to the low, soup to the high, stable low, stable high, premium discount. We tell that we're in this is a discount region, and this is a low that broke a high to the same important key level. So boom, and during this time I couldn't participate in it because the time we souped it out was what, 13 p.m. And the next day when it gets tapped, the marble one that souped at an important low, that candle soup at an important low will be used at the key level that we can use on the next day to long it up without having a CRT play. So you can see how we have to go, we have to go like this in order for us to be more efficient. You can see how I'm constantly evolving. And the weekly IRL to ERL, ERL to IRL, those concepts are very difficult, right? This right over here plays it very simple and easy, right? Auto blocks, CRTs, ranges, daily ranges, open high low close, open high low close, etc., etc. Those concepts are much more easier to trade with rather than trading with the concept of IRL to ERL, which is very difficult, right? Which is what is your IRL? Where is your ERL? Yes, you may have your ERL, but where is the dominant ERL? Which is a bullshit concept to me. I made that shit up, alright? It's a bullshit concept. I'm not gonna lie to you guys. But where's like where is the ERL, right? Just easy to predict, but where's the IRL, right? There's so much IRL here, everywhere here, right? It's everywhere. So it's gonna be hard for you to determine where's your IRL. So yeah, that's the lesson of the day. So now let's get straight into the lesson. Lesson of the day is from now on forward, I'm gonna write it down right after I right after it's finished. Right after I finish this video is what I'm gonna write down is the higher time frame. I'm gonna write down, okay, I pay attention to the lesson is I pay attention to the higher time frame candle shape, like open high low close, open low high close. So on the 3-month time frame and the monthly time frame. Now higher time frame did that because I don't trade that, and the quarterly candle, the monthly candle is very important. And the next lesson is I must pay attention to the monthly, the quarterly CRTs, right? What I mean by quarterly CRTs is 1 month accumulation, 2nd month manipulation, 3rd month expansion, right? So quarterly CRTs. And that's the overall lesson. The next lesson is I can trade auto blocks. The only auto blocks I can trade is if it shoots out an important low, which has to be the important low has to be in the daily range. Without being in the daily range, we cannot trade it, right? Because there's not gonna be important lows. And the other way we can trade a auto block if it's souped out a CRT low or a range low or a low, which when you super the low is gonna be a CRT, right? Obviously. And the only way I could be able to trade it is if it's above or below the, if it's above or below an old range, right? So let's just say this marble one or this auto block is an old range, right? Which got accumulation, manipulation, expansion. So below this, above, this is a new range here, right? It's kind of hard for me to explain it, but I feel like you get it, right? So this is right over here is a new range, right? And below this new range, we have the old range. It's going to be counted as an auto block, right? Auto blocks are basically ranges, right? And when a range gets created and the range gets souped and expands, it's going to leave out a auto block. So what we had here below this new range, we had an old range. So the only time I can trade the new range if there's an old range is only when the old range gets tapped. And if there's no old range, then we can trade it right when the new range gets souped, and then we can take it up. But if the old range is there, we have to wait for the old range to get tapped in order for us to take a trade. Otherwise, we cannot, because that's going to lead us to either it gets stopped out in a lower time frame, because lower time frame is very important, right? Lower time frame execution is much more important than the analysis, right? Because what I'm doing here is, it's not insights, but they happen, right? I trust something that happens in the past, right? I have no doubt in it. And yeah, that's the next lesson. It's kind of hard for me to say. I will put it down in notes, and I will talk in the future about it. But yeah, that's the lesson as overall, because that right over here would have saved me from this loss in the lower time frame, because below this old low, there's a provide gap. I would have longed it up. I would have get souped out, because I should have only traded when the market taps this. After the market taps this, then I take a trade, because I would have been stopped on a lower time frame. And that's the overall lesson. Now what we're gonna do from now on forward, we're gonna pay this to the 3-month time frame, monthly time frame, open, hello, close, open to the soup, continuation, close, open, key level, go rally, close, etc., etc. And the next lesson is gonna do is we're gonna pay attention to the order blocks on the daily time frame. Now we can trade the order blocks. This helps us trade more than just once, right? And eventually you can see during this time to the continuation to the upside, we never had a setup, right? So I mean, yeah, we never had a setup because order block never get tapped. But you see, if I go back in time, there should have been another good example for us here. Let me see. Right over here, another good example, right? After you see that is low, this order block could have been used to make the price explode. But we want it like this. So in order for us to trade an order block, we want something like this, right? Rather than like this, because on Friday, if we were to take a short thinking to go down lower on Monday, you would have been stopped out, because your stop loss going to be on a Monday candle, in the Friday candle, right? So I will right after this video ends, I will think through it and I will find it out my answer, because I need to think something before I can publish it in the public. But this right over here, I just think about the quote about the tweet, and it came to my mind, and it was, this literally works, right over here, boom, I push it up. In this case, I would have not used it in this case, because the order block there needs to be no range, and the order block needs to be above the new range. And yeah, I would have traded this alone, boom. But let me see if I get an example. This could have been a beautiful example. This candle, I would have just said the range. This candle, I would have not taken this order block, because this order block, this candle never souped out a old low, or yeah, old low or old high, etc., etc., vice versa. And any other examples I got? This would have been one of the examples as well. No, actually, no, because the CRT is right inside of it, it's not above it. So we use the CRT itself. This right over here would have been an example as well to the downside. Let me go to that. Look, let me go a little bit more in depth here. This one over here would have been one as well, because look, this candle double this old low. Shut up, and we can take this model one without worrying about a range to be there and a range to getting souped. Why? Because this candle still got an old range. If it were like in a way, it taps this key level, but it ranges inside. And when that happens, then we have to wait for the range to close and we then have to wait for the range low to get soup, then go up higher, just like this, right? This is our model one. This candle is supposed to be the one to continue, but and you know, first of all, we never close below this candle because as an order block, and what I call an order block, it needs to give us a full candle closure, right? Otherwise, I don't count it as a order block. It's my perspective because, you know, close above higher prices, close below lower prices, wake above reversals slash retracements, which reversals we don't want. Right, in this case, this candle, how do you just use this range? Order out, caring about the order block, because order block first, not the right order block. Second is that there was a range created inside of it, so we have not traded it. So yeah, thanks for watching. Make sure you guys like, comment, subscribe, share. It is a lesson and a beautiful lesson. And I'll see you guys later. Peace out.